For some analysis of all things financial, Doug Flynn, certified financial planner and the co-founder of Flynn Zito Capital Management. Let me get you on Iran first, because that is how do you think the president and the administration will handle Iran here? Because to the point, if they go after them on oil, it certainly could have an impact on price. So what do you expect?
Yeah, I think you got a little room there, but they did allow Iran to go from 400,000 barrels a day up to 2 million barrels a day. So a lot of that money is flowing into there, and China's benefiting. So I understand why they did it, but if they start to tamp that down, obviously that will cut off some of the money that's going to Iran, and then theoretically finding its way towards this terrorism. And that may make prices go up a little bit. The big problem we have is the president spent down a lot of the strategic petroleum reserve. Mm-hmm. We're only down to about 17 days worth. And so you don't have that tool in your toolbox to release to try to offset some of the prices. And so it might go up a little bit, but I don't think it's a big enough area that we couldn't overcome that by doing some other things ourselves. The Exxon deal is going to do some more fracking. I know that's not what people want to hear, but that's how you offset some of those price increases. Right.
That was a big deal that Exxon made, to your point, this week. But it's also a good point about the Strategic Petroleum Reserve, which, when an administration taps into it, this is what they say, because you got to be careful when you use it, because it can come back to bite you. Thoughts on the strike? UAW expanding, that was a big Ford plan. I mean, it's obviously got lost in the shuffle this week with everything else that we've been talking about. I mean, how do you, but it's still going on. It's a lot of people. How do you see the impact of this strike?
I look at it really in three ways. If you look at it, I have sympathy for the workers. There's downstream effects. A lot of the parts suppliers are laying off people that aren't directly connected to the union, but there's downstream effect of that. So you want the workers to make as much money as possible. If you look at it as a consumer, the average new car monthly payment is now $736 a month for a new car. I mean, how much more is it going to go up? Which is likely going to happen. And then if you look at it as an investor, which is the third way, the companies are going to lose billions of dollars. And, from that standpoint, the U.S. workers do make, including benefits, about $60 an hour now. The Asian manufacturers here in the U.S., their total payment is about $40 to $45 an hour. So we're already way overpaying relative to those other companies. How much more can they pay? What impact is that on the company? You got to watch. You got to get more, but you don't want to push too hard, because then you end up with a lot more automation, and you might automate yourself right out of a job.
Right. It's long term versus short term. This is always the question for workers in a situation like this. Okay, Doug, always good to see you, and thanks very much for coming on. Doug Flynn, we'll see you soon.